Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, October 24th, 6:37 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Taking a quick look at futures, not a lot going on. Equities ticking green, but not very dramatically. Oil down about 1%. Nat gas has dropped below $5. As the weather in Europe has remained quite moderate, and the fleet of LNG shippers are starting to pile up significantly in the ports of Europe, having trouble offloading. When we go to the macro front, we've got Chicago Fed this morning. We've also got a flash PMI at 9:45. But later on in the week, we've got bigger numbers coming out. The GDP is Thursday, and then the CPI is Friday. Over on the earnings front, of course, there's a lot of companies today, but none that I saw of great significance. But tomorrow we get into the meat of S&P 500 earnings. We've got UPS, General Motors, Coke, Cleveland Cliffs, Halliburton, GE, Visa, 3M, and then in the afternoon we start getting into mega cap tech. Microsoft, Google. I've got Visa down here twice. I'm not sure if it's morning or afternoon tomorrow. Check that if you're interested in trading that. Chipotle, Spotify, and Texas Instruments. So, first of all, I hope you guys had a good weekend and are ready to dive into it. So let's jump into our charts. U.S. dollar, big wide-ranging day. Some chatter online about central bank intervention on the yen on Friday. As it broke above 150, you see this pretty big bar on Friday, reached higher in the morning and then closed lower. But the big takeaway here is still in a major uptrend, and now we've got a line of resistance across the top right about 114. So if you wanted to put an alarm there, that's fine. On the bottom side, I'd probably alarm 111 just as a heads up, even though we do have the 50 EMA coming right in here at 110.50. Rough day for TLT on Friday. This thing has just fallen away in the last couple of days. You can see it's kind of a doji bar. So could be a potential place for a reversal here. We'll just have to watch that. VIX also made a move down below 30, but above 29. I think you should have both of those levels alarmed in your system. If we break 29, that would be hugely bullish. We will have dropped out of this uptrend and dropped down below support here on the VIX, and that would open up the door for a bigger move down, which would be nice. Bitcoin still hovering. Oil still hovering here between the right at the 8 and the 20 day, down at 85. You can see PPO trying to break above the zero line. Same thing with RSI. We get a green day here. Probably get breaks above on the indicators as well. But regardless, the energy stocks have been doing well. The refiners, the integrated names that we've been talking about. We'll look at VLO and ExxonMobil at the back end of the deck. But even with prices, kind of muted, the stocks have been doing really well. Wanted to show you this gold 60-minute chart. We have a double bottom in place here, and you can see I didn't draw it in. I should have. If I were to draw a downtrend line here, price has broken out of that. There's going to be some resistance here at the high volume over price value area between 154.50 and 156. But keep that on your radar if you're interested in a gold trade. Even if it's just getting back up to these prior highs at 160, that would be a nice trade. On our oscillators, NIMO still working its way higher, but at the middle of the range, so we don't have real actionable information. But, if you're bullishly positioned, you'd rather be coming out of oversold, moving higher, than the other way around. So we were up, what were we up? 20 points on Friday on that move. And the same could be said of NAMO on the NASDAQ, that still in the middle of the range, not particularly actionable, but working towards the top of the range, up towards 60. Moving on to SPY, really nice day, 2.5%. And one of the people asked me in the trading room on Friday or over the weekend, is the bottom in? And I've learned to be reluctant about trying to call that kind of stuff, just because it's really not particularly useful. Because we could go up here, a very tradable rally, and then come back down and make a new low. I think, the jury is still out on if we get a recession, in the early part of 2023. Some people say we're in one now. The path of the Fed, all kind of stuff can factor in. But what I will say is we've recaptured some of our major pivots, and here on the SPY, we're back above that 370 level, which in my mind was an important level to recapture if we're going to go higher. And we've got a series of lows along here. We've got that June low back at 362.50, and we've got, you can see, a lot of support in here, a lot of support in here. We did have the big scary undercut day, but then they bought it right back up. So I'm viewing this as a tradable bottom, and I want to point out a couple of kind of big macro catalysts that I want you to be aware of. We do have the FOMC. I think the decision date is November 2nd. I think they've signaled pretty clearly that they're going to go 75 basis points, but that's probably, all in the market already. I think if you look at the probabilities, it's like 99.5% kind of a thing. So I'm sure that's in the market. We've also got Q4 seasonality, which is usually positive heading into the new year. We've also got the U.S. elections. There may be a big bump out of that if there's a regime change. Maybe moderate some of the policies that people feel are holding back the economy or whatever. And then one thing to look for outside the United States is to China in a potential Xi pivot. Xi is going for his third term over in the Party Congress in China. And one of the things is that people have their eye on is these COVID lockdowns. And if you see or get the sense that Xi makes a pivot there now that he's elected, putting someone else in charge of COVID would be a sign, or some edict that we're not going to do these draconian lockdowns. That's going to unleash a torrent of economic activity in China, because right now they're the people, the citizenry, the businesses are all operating under fear mode. I mean, if you're a citizen and you go to the grocery store and you happen to be in the store getting some food and they find a positive COVID test, you could be whisked away for a month, right? I mean, literally, you're not going back home. You're going to a camp for a month until we get negative tests. So obviously, if that's going on, you're going to be very judicious about your movements for fear of being, picked up on a random COVID test. If you were in the area, if you were in the store, you're gone. So if there's a moderation in that policy, that could be very stimulative for China and therefore the world. So keep an eye on that. So back to the charts. Above 370, I think you can stay very constructive on trying to get a tradable bounce. I've got the Fibonacci retracements in there for you to use as a reference. When we go down to the 60-minute chart, what I've done is draw in a emerging uptrend channel, and you can see it here. We broke above 370 on Friday and closed pretty strong. I think the next big resistance level is here at 377.50. You break above that, then you got some running room up towards 387.50. Probably not going to happen all today. All I'm saying is we, top of the channel, bottom, top, bottom, and now we're in an up cycle where if we can clear 377.50, that would open the door for another run back up to the top of the channel. Same kind of analysis here. We recaptured the main pivot at 270, and that was the June low. So in my mind, you're shooting against the June low, right? As long as that holds, then the rally can proceed. If we go down to the hourly chart, you can see we've got a pretty nice little $5 gap here of fill. We're right at it right now. So I think this morning, above 275, you can take that long and look for a gap fill up to 280. And then above that, you're up at the top of the channel and lateral resistance at 285. So fingers crossed there. IWM, nice day, 2%. Much different setup here, just for the simple fact is all the June lows held. We got a little double bottom in place here. We've got that classic W formation happening with room to the upside till we get to a more significant area of resistance here at about 177. You see support here, but then a line of resistance across the top. Getting through 177, I think, will be a big deal on IWM. Actually, here I've got it at 176. with a pivot here at 173 at the midpoint of this upper range. You break above 173, then you clear a path up to 176. And a breakout there would give you that $12 measured move. If you take this whole big trading range of $12, you break out of 176, then you're shooting for 188 in this gap fill up here. Moving on to Meta, still kind of in the weeds. I mean, we're still firmly in the downtrend channel, just having cleared the midpoint, and I think you got a pivot point here at about 130, 131 type area. If it can get through that, then up to 134. But I mean, for a bigger, more substantial move, you got to break out above 134, and then that'll open the door to 138 and 142 if it can get going. Apple, right here on the verge of, well, it's in this gap here up to 149.50. You can see that we took out this line of resistance here, this larger, higher volume over price bar here. Rejection, 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 breakout, right? So now we're here at 147. As long as it can hold the bottom of the gap, I think you can be long and look for a gap fill and probably even higher up to the bottom of the next gap here at about 150 and a half, 151, right in that area. So Apple is doing well. Lots of objective trading on Friday. We had an opening bar that came back to touch this 142 and a half. And if you were Johnny on the spot, that was a great place to buy. You got tremendous follow through on a Friday afternoon that worked out great if you got that. Tesla, right here at the bottom of the gap from 215 up to 222. But in general, I think to really get this thing going, you got to break above this big line right here at 225. So that's completely up to you whether you want to try and trade for this $5 to $7 move here, or if you want to simply alarm 225 and be ready to go for a bigger breakout if it comes there. Microsoft, this 235 has been a great place to buy. You can see all the support along there. Had a chance to buy there on Friday, get a move up to 242.50. Now we're right at the bottom of this gap. That's $5 wide. You get a breakout this morning above 242.50. I think you got to be long there and look for that gap fill up to 247 and a half. And then if somehow we can get above 250, where you see where it had made a try back here, a couple of rejections, if you get above 250, then you really got some running room to the upside. Same kind of price action on Amazon on Friday. There was a pullback into 115, which was our central pivot. I've since moved that pivot up to 118 because we're in the gap. So today, if you were to get a pullback to 118 that held, I think you can be a buyer there and look for a move to completely fill that gap up to like 120 and a half. You got a little line of resistance and higher volume over price bars at 121. But above 121, then you're looking for 123 and 126 on Amazon. And don't forget, we've got all these guys reporting this week. So keep in mind where you're at in relation to earnings. And it's, we may see that pre-earnings push, into, I think they report Thursday, but please check that. So keep that in mind. And then, of course, on the earnings day, as we come into 4 o'clock on the earnings day, you're probably going to want to take that off or at least reposition if you're going to play earnings. We've kind of talked that to death. So trade that as you see fit. Just keep in mind that earnings are right around the corner. Google really needs to get through 101.50 for 103, and then 103 is your big level here. Above 103, then you're open up to 106, and then 109. A lot of excitement in Netflix on Friday. This was just a great trade. What made it great was at the opening of the morning, we undercut this 270 pivot that we had, and then on the recapture, that was your buy, and you got to move right up to the top of the bracket, and then you got the bracket breakout. So in essence, it was up from a tradable standpoint $20. Now it was up 21 from the open, but you certainly had an objective level here and an objective level here at the top of the bracket, 279.30, where you could have got that. So the interesting thing here is the 200 EMA is right here at 290. So let's say you missed all that, right? And there's some little pullback or something, in the morning. And then at some point during the day, you get a breakout above 290. You buy that. Why? Because now you've recaptured the 200, and then you'll have a great pivot to trade against, looking for this gap fill. And I'll just show you that on the daily chart. Here, the 200 comes in right at 290. We've still got the gap below. This was our original bracket. And then we had the big impulsive candle on Friday that brought us right up to the 200. And you can see we've still got $60 of gap to fill up to that 350, which was the gap created on earnings way back when, way back in April, where it dropped $100 on earnings. So really a critical spot right here on Netflix, right at the 200. SMH on Friday emerged from this 185 pivot, rejection, support, back in to the $10 wide trading range. So on a measured move basis, you're looking for 195 on semis. The fly in the ointment will be at around 190, where you've got the convergence of the downtrend line and the midpoint of this trading range. So if you're long or you get long and you get that $5 move, you got two choices. Just, hang in and hope you get the breakout, or make a quick trip to the bank, take it off, and then wait for price to prove it above 190, and then get long again for a move to 195. And then if the stars align, you get the gap fill up to 200. And then that would be, part two of your two-part trade. ARC really didn't get the horsepower that you normally see. I mean, it was a market perform on Friday, up 2%. But here again, you've got a great line in the sand to shoot against at 1475, and we're only at 1550. So if you can take 75 cents a heat, you're on the right side of the chart. Now the question becomes, can you get this breakout, make a run up to 17 and potentially up to 1875 on the ARC F? Not quite as dynamic here on ARC G, still below this large volume over price resistance at 3150. I think you got to wait to get that confirmation before getting long, and then if you get a break above 3150, then you can get long there. See if you get this breakout above the channel and a move towards 34. Flagship fund right here at the pivot at 36, right? So you get a breakout there, then the door would technically be open up to 40 if you can get past this downtrend line on the daily. ARC W, same thing, still below the major pivot here at 46. I think you got to wait if you're thinking long. I wouldn't try to front run that. Wait till you get that breakout and then get back in this trading range, and then you can shoot against 45, 46 on your ARC W trade. Valero, got the breakout on Friday. Up 265. So now I'm looking for a measured move back up to the top of the box at 142.50. I believe Valero does report this week. I'm in November 130s. I think what I'm going to do is I'm going to hold through earnings on this one. Not typically what I do, but that's my game plan right now because refining margins have been so strong. Anything can happen, but I think I'm inclined to roll the dice on this one. Now, if we get some kind of monster move between now and when earnings come, I'll probably go to the bank and just get up to even money, make sure, I take something to the bank on that and then see what happens. If I change my mind, I will let you know. And then on ExxonMobil, we had gone up to the 103 strike, and we made a nice move on Friday, up almost 2%. So now we're above this prior high. So now the door is open for much higher prices. So we'll have to see how that goes. And Exxon reports on Friday. So I'm in the Friday expiration. So unless something happens, I plan to kind of hold that into earnings. And if that changes, I will certainly let you know. So, I think a rally here was the last thing people were expecting. Very bearish positioning, very bearish sentiment. And now, we're lifting. I think there's a good chance to see some additional short covering plus buying for the reasons that I already stated. So I really like the idea of leaning to the long side, but with the objective levels of 370 on SPY, 270 on Qs, 170 on IWM. I think if we're above all those levels, I think you gotta stay bullish, at least until we get up into some, very clear resistance areas where it may be a lot tougher. So let's wrap it up there. Hope you guys are poised for a great week of trading. Let's see how it goes. If you're new to the channel and you like technical analysis and a game plan each and every morning, please hit the subscribe button, the alarm bell. You'll get that YouTube content. And then look over in the show notes for a link to the blog site where you can drop in your name and register, join the team. You'll not only get all my content directly to your email box each and every day during the day whenever I send out a note, but you also get an invite to our trading room where you can come after hours or during hours whenever you can. Lots of aspiring traders in there that are looking to improve, helping each other out, spotting interesting stocks that they're tracking that you may want to participate in. So it's a good group of traders, and I certainly welcome you if that's something that you're interested in. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.